What's up, my fellow warriors? I'm Marshall Sparkman, VA loan specialist. So I'm a fellow veteran, and since I got out of the military, just VA loans started coming naturally to me, where people would refer other veterans. So I've kind of built my business around it. I've made myself a student of VA loans, and one question that I get asked a lot is about VA maximum loan amounts. It's a common misconception. VA actually does not have a maximum loan amount. So I wanted to do a quick video to try to explain it because there's a lot of confusion behind it. So I'm going to make this quick. I'm going to throw a lot at you, and if you have additional questions, I'm going to invite you to give me a call and run your scenario by me. So the VA does not have any maximum loan amount. However, the VA, what they do is they insure the mortgage. So an example is if your client were to foreclose on the house, the VA is going to give a bank back a portion of the money that they lost. So the VA actually insures 25% of the mortgage. So for an example, if you've got a client with a $200,000 house, for example, and a $200,000 loan, and they were to foreclose, the bank is going to guarantee 25% of that, or $50,000. So on average, they say the latest numbers, it cost about $50,000 for a bank to foreclose on a property. So the bank, anything over $200,000, generally, as a rule of thumb, they're going to get their money back from the VA. Anything under $200,000, they're not. There's a chance that they may not get all their money back. That's why the smaller loan amounts are bigger risk, and banks may charge higher rates or have other underwriting requirements on top of the smaller loan amounts. So here's how this works. Anything over the county's maximum loan amount. So the county max loan amount is set by FHFA, or Federal Housing Department. I don't even know what it stands for, but FHFA. They just came out with the new 2019 loan limits. For most counties in Middle Tennessee, the max loan amount is now going to be $534,750. So the way the VA does it is anything over the county's max loan amount, the borrower has to put down 25% of the difference. So here's an example. Let's say a client is wanting to buy a $700,000 house. They would have to put down 25% of the difference between 700,000 and the 534,750. So in this case, it would be $165,000, 165,250 to be exact, and 25% of that would be $41,312. So the client in this case would have to bring $41,312 to buy a $700,000 house. So that's just a little bit over 5% down, which is still a great deal considering the low interest rates, the no mortgage insurance. Funding fees are waived if they've got a service-connected disability, which most veterans do. So that's kind of in a nutshell how the VA maximum loan amount works. Hopefully I've explained it well. If you've got any questions or any scenarios, give me a shout. I close a ton of VA loans, and my VA underwriter sits right across the hall from me. And she's been underwriting VA loans for so long, her underwriting number begins with a 0. I always make fun of her. So I'm here for you guys. Let me know if I can help you or any veterans anytime. Thanks.